Well, we are really getting into something interesting here, and I think you're really going to like this strategy. It's very exciting. It's something that should come naturally to you after going through the first 9 modules here. And you should really have a good understanding, at least what you're looking at, because this is, our profit graph. This is the graph that we use all the time when we're doing positive theta trades. This is a positive theta trade that I have on right now on the QQQs, and as you can see, we're positive theta about 42.78. That means that, of course, we collect money every single day that this position is on, because our options will expire and option premiums will decrease and decay over time until expiration, as long as they're out of the money or even at the money. So what I have here is a September. Basically, it's an iron condor. But what is an iron condor? An iron condor is really nothing more than a bunch of vertical spreads for credits. You're basically doing vertical credit spreads. And as you can tell right now, that it's just slightly, our current price is right here. It's just slightly off to the center. Of course, we'd like to be at the center, but it isn't. It's slightly off to the center. Now, in times previous, in the previous modules, I've talked about adjusting. And many people have written to me and asked me about adjusting because sometimes they get it, sometimes they don't quite get it. I say that adjustments are probably the most important thing that you can learn in this course, because once you put a position on like this, what happens if it moves against you? Well, remember what we talked about in gamma scalping. In gamma scalping, basically what we did was we purchased a straddle and then we traded the stock around that. Ideally, what we want to have happen is to keep the prices basically in the center of our profit graph, or at least adjust it so that we can continue to have a nice profit area here before expiration. But here's the issue that you have when you do any kind of vertical spread, or condors, or even if you're doing calendars or something like that. And that is that you can adjust it maybe once, but remember I told you try not to overtrade as much as you can. In other words, you might make one adjustment on a position 30 to 40 days before expiration, but after that you really can't do any more adjustments because the premium just isn't there. Calendars are great for adjustments because you can always do an at the money calendar, and you've got some premium there at the money and right up until expiration. But for the most part, it's very difficult to do adjustments more than one time. And normally, if the price goes against you immediately after putting on a theta trade like this, a positive theta trade in which you're doing calendars or double calendars or vertical spreads of any kind, that's about all you're going to get a chance to do. If it goes against you immediately, you get to adjust. But as you get closer to expiration, it's almost impossible to adjust. That's why this is kind of interesting. I call it theta scalping. It's just like gamma scalping, only it's a little different, but you're basically doing the same kind of strategy. You're going to be taking a look at your deltas. Just like with gamma scalping, you're going to be taking a look at your deltas in order to become delta neutral. As I mentioned, but it's with a purpose, becoming delta neutral with a purpose, and that is to keep the maximum amount of profit potential going in your trade as much as you can. Now, you can see that the price is right here right now. In order for us to get delta neutral, what do we have to do? Well, if we're negative 248 deltas, that means that we are short 248 shares of stock. In order to neutralize that to zero, what would we have to do? Well, one thing that we can do is go into our trade tab here, and we can try to pick up some deltas. So if we go back here, we take a look at this, we need to pick up 248 deltas. How can we pick up 248 deltas? Without cutting into our theta, we don't want to cut into our theta here, but we want to neutralize our deltas. Okay, we're slightly negative vega too, so if we're short Vega, so if Vega goes down, we make money. If Vega goes up, which usually means a dropping stock market, that means that we're going to lose a little bit of money. But I'm not too worried about the Vega at this point. These are September options, and the current date is August 7th. So I'm not worried about Vega too much. I want to keep my Theta. Obviously, this is how we make the money. Make money in this trade is we keep Theta as high as possible. But what we want to do is we want to neutralize our deltas. We want to get back to the center of this graph somehow, where most of the money is made in this trade. So there's a number of things that we can do to neutralize our delta. If we go over to the trade tab here, we can take a look now we've got these positions on in September, but there's nothing to say that we can't use August options, which still have 8 days left of expiration, in order to neutralize our delta. The only problem with utilizing August expiration options with a position that is going to expire in September is that we may not be able to find the deltas that we need. Now, we need 250 deltas. Well, if we wanted 250 deltas, we could always buy 3 of the August 44 calls, because they have a delta of 85, and if we bought 3 of those, 3 times 85 is about 240. Let's try that. Let's go over here and select, we're going to buy 3 of those. Let's go here and analyze this as a duplicate trade to see what it does to our graph. Well, it does get us back into a neutral delta position, doesn't it? Because we only have 11, we're 11.54 deltas. We were, let me uncheck this, at negative 248 deltas. So buying 3 of the 44 calls with an 85 delta does put us back into a delta neutral position. But what does it also do? Well, number one, it severely restricts the amount of money that we can make. Let's take a look at the green line, which is our expiration line. At expiration, we're going to make $3,440 right at the peak. If we buy the August 44 calls, how much can we make if we keep this to expiration? Well, actually, to the expiration of that call, only $404. It severely cuts into our Theta, doesn't it? Let's do that again. Take a look at the Theta. It's 3278. Buying those 3 calls puts us to delta neutral, but it also cuts into our Theta quite a bit and also reduces our profit graph. So it's an option, and we can do that. Let's take a look at another option. One of the more popular ideas for adjustments is to buy a calendar, which is a current at the money calendar. And that's the way that we're talking about doing adjustments in the earlier part of the course, and talking about just raising the graph in case this does start to move up. Put a calendar right at where the price may tend to go, like at the 47 strike price. So let's go over here and let's do a calendar at the 47 strike price, and we'll go ahead and analyze that. And I think we're probably going to need more than one. And that does somewhat, helps lengthen the top of the curve here, because it's the green line that we're interested in. That's how the maximum amount of money that we can actually make. So this really does restrict the amount of money that we can actually make in this trade right up to expiration with, adjustments of a calendar. I mean, we'd have to do extraordinary amounts of calendars in order to get back to any type of level that we previously had. I mean, previously we had, this. Plus, we could always do, let's do September, there we go. Let's see what that does. Now that's a little bit better, but we still have to do quite a few calendars, don't we? And look what happens immediately. I mean, once we put this calendar on, oops, I just got to do this. Okay, there we go. Once we put this calendar on, it does help us adjust, and that is one way of doing it. You can do calendars. I think they're a little bit better than buying the actual options itself. Let's do one other thing just in contrast. And it does add to your actual graph, but only at the center. If we do the 48, now what it does is it extends it out. So there's plenty of room here to do calendars. You can add calendars, but look at how many we have to do. We have to do 16 calendars in order to get to $3,300 in maximum profit. If we take that off again, let me just remind you that we had a $3,400 profit without the calendar. Yes, we can add the calendar and extend our break even to the upside, but look what happens to our profit. We lose money. We lose a couple $100 on our maximum profit. In addition, look at the transaction costs. The transaction cost for buying 16 calendars, okay, let's say we wanted to keep the exact same amount of money that we had in the previous trade. Our maximum profit was $34.40. If we add the calendar, we're at $33.51 right at the peak here. That's our maximum profit at that peak. Well, in order to get back up to $34.40, we'd have to add, over this, and then we'd have to be at this particular peak, we'd have to add 27 calendars at a cost of $1.50 per calendar times, now we've got 27 of the Octobers, we've got 27 of the Septembers. So we've got 54 contracts. That's $81 in commissions just to put on that calendar. Okay? Well, this is what Theta Scalping is all about, is extending our break even, bringing us back to delta neutral. It did help our delta, didn't it? But it didn't put us back to delta neutral. You see that? Even though we added 27 calendars, it did help our delta, but it didn't bring us back to delta neutral, and it reduced our profit potential on the trade. Now this is the way we've been learning how to do it, is by adjusting using calendars. How many calendars would we have to do to get to delta neutral, or approximately delta neutral? We'd have to do 45 calendars to get to delta neutral. And that's one of the reasons why I told you guys to trade small. Because when you're doing one or two contracts, when you put a position on for the very first time, and you do one or two contracts, it's easy to adjust, because you can adjust by putting on 3 or 4 contracts. And you don't lose too much. You actually make a little bit more money when you add calendars. And you can adjust using calendars. And I just showed you that you can adjust using calendars, but we'd have to add 45 contracts to get to delta neutral. And that's a lot of contracts. And the reason we had to add 45 contracts to this position in order to get close to delta, and we didn't even get, yeah, we can get delta neutral, but it also, if you noticed, it restricted the amount of money that we could make on this position. So, but the reason we had to have 45 contracts is because I already have a lot of contracts on. I've got 5 of these, I got 10 of these, I got 5 of this, I'm short 10 of those, I'm short 10 of those, I'm short 5 of those, I got 10 of those, and I got 5 of those. So I've got a lot of contracts here. I've got 10, 20, 30, 40, 50, 60 contracts on already. So we needed 45 contracts just to get to delta neutral and to raise our tent so that we wouldn't get hurt if the price moved against us too much. There is another way, and what I do is I call this theta scalping. I don't know what other people call it. I'm not really sure what other people call it, but it is, I think, is the best form of adjustment if you're doing large numbers. In other words, I didn't add these vertical spreads onto this position at the very beginning. I added them a couple of different days, and we're still, let's see, we're September here. We're still 43 days from September expiration. So if you take a look at my positions, you can see I've got I'm short these two, the 44, 45 puts, and I'm long the 37, 38. So these are extremely wide. And this is not what I taught in the beginning of the module. I'm short the 46 calls, and I'm short the 48 calls, and then I'm long the 53, 54s. These are extremely wide, not like the ones that you learned in the beginning of the module, because these types of positions require that you have, number one, a little additional capital. Number two is that they are all iron condors, or they are vertical spreads for credits. If you want to stay in your position, the only way to stay in your position is to do theta scalping. Now, just like gamma scalping, we purchased a straddle. And then in order to adjust that straddle, we bought and sold the stock in order to remain delta neutral. The closer we get to expiration, the larger the gamma. For example, if we were to do this on the Qs here, and we wanted to buy the current straddle, let's take it over here, and I'm just going to hide my positions here for a second. Let's say we wanted to do a 10 straddle, 10 contract straddle. Well, we immediately start out with, we're short 106 deltas. In order to get delta neutral, we had to buy, we're going to have to buy 100 shares of the stock, right? That brings us right back into delta neutral, or approximately. It's close enough. It's 6.42. Now, buying 100 shares of the Qs is going to cost us a $5 commission, right? And it's also going to reduce our buying power by $2,300. Okay, well, that's the cost of doing business. In our theta scalping trades, let's get rid of these now. We have just the opposite goal. The opposite goal is the goal is pretty much the same. We still want to make money. Another goal that's the same is we want to be delta neutral, because bringing the current price to a delta neutral position helps us align ourselves with the maximum profit potential of this position. Let me say that again. Bringing ourselves back to a delta neutral position helps us align ourselves with the maximum profit potential of this position. So in order to get delta neutral, if we are negative 248 deltas, what do we have to do to get delta neutral? Well, we have to buy approximately 250 shares of stock. And that's exactly what we did. In this case, rather than buying 250 shares, I'm going to buy 200 shares and stay slightly negative delta. It doesn't have to be perfect. 200 shares puts us almost directly into a delta neutral position and helps to maintain. It does decrease our maximum profitability a little bit, but what it does is it keeps us in the center of our profit graph. So even if the price were to move, now as we get farther up, let's say we buy 200 shares of the Qs and the price moves up to 48. Let's take advantage of the Thinkorswim platform and advance the price by $2 to 48. Now on the Qs, that's a big move. Okay, now we're way over here. Our price has moved to 48. 48.27. We're currently in a negative delta position of 456. But we move from 46 to 48. So we've made 2 points on our 200 shares that we were long. The problem is we're still not delta neutral. In order to get delta neutral, we have to go back and we have to buy some more shares. In this case, we have to buy another 400 shares of the Qs. Now we're long 600 shares, okay, but we are delta neutral again. Again, our maximum profit has been reduced. However, we are delta neutral, which means, and let's advance the date here, for each day that we increase in time, the more money we make because we are delta neutral. Let's take this 400 share stock off. If we were not delta neutral, we would still be in a losing position. Let's go back to the current date. We're currently down $475. In order for us to make any money at all, we would have to advance the date almost to expiration, past August expiration, all the way just to break even about 14 days. But by buying these 400 shares, we would be in immediately a positive. We're in a delta position, a neutral delta position that we put ourselves in originally, and now we have a profit of 688 shares, $688. Let me reset the time again, and I'll take off both of our stock positions. We're way over to the right side of our graph. And today is, today's the 8th. So we are in an extreme negative position. We're losing $823. We're 656 deltas short. In order for us to become delta neutral, we need to buy 600 shares of stock. But because we didn't adjust soon enough, we adjusted a little bit too late, but we still adjusted. So we still have a small profit here. The problem is we're getting very close to the end of our graph, at which time, even if the price does start to move up, we're going to make money because we're long 600 shares of stock. Let me go back and adjust this again. This is our current position. We're short 248 deltas. I buy 200 shares of the Qs in order to get delta neutral. Let's progress time. Let's say the price had a big move up just recently, and it went from 45 up to 46.27. Now we've hedged. We bought 200 shares of the Qs. We are delta neutral, and now for a couple of days the stock just sits there. Well, each day the stock just sits there, we increase our profit for the day by $46, which is our theta. After 3 or 4 days, we're still delta neutral. The price barely moved around the center, and we continue to make money in this position. Now, if the price were to continue to move against us to the upside, let's say it goes up 1 point. Well, now we're 300 deltas short. We already have our 200 shares long that we bought back when it was at 46.27. Well, now we're $200 richer because we're long those 200 shares, but we're not delta neutral. So now we have to go in and we have to buy 300 shares. Now, once again, we are delta neutral. A couple days more go by in which nothing happens. We are now profitable by $460 in the position, and we are long 500 shares of the stock. Well, if the price continues to move up on us, we become short 231 deltas. Well, we've already gone from 47.27, 46.27, all the way up to almost 48.27. That's $2, and we were long 500 shares of stock. We made money on 2 points on the 200 shares that we bought at 46.27, and we have another 300 shares that we bought on the last point. But now we're short 231 deltas again. So now we go ahead and buy another 200 shares. Now we're long 700 shares, but we are delta neutral. And now we have a profit of $677. Once again, the price doesn't move. In other words, what happens is every single time that we adjust for our deltas, we put ourselves in a position in which, as the day goes by, our theta is working for us as much as possible. In other words, if we're way down here, if we're way down at 44, we're losing $1,200. It's going to take us a long time to get back to a delta neutral position. It's going to take us a long time to get back into a profitable position. By adjusting to become delta neutral, you put yourself in the center of the graph, not the center of the profit graph, but the center of the current profit and loss graph. Not our expiration graph, the current profit and loss graph. So that each day we can collect the full $40 in theta that we have coming as for holding this position. Also, remember that when you're buying the stock, the commissions are very low. So far we've had 3 transactions and it's only cost us $15 in commissions. Plus we've accumulated additional profits by being long the stock as the stock has moved up. Let's go back and reset everything. This time, I have to go back to today's date. There we go. This time, the price moves against us. Let's say it goes from the current price of $46.27 down to $45.27. So let's say the price goes down to 45. So we're just going to adjust our stock price to 45. Well, aren't we lucky? We got exactly delta neutral. Because the stock came down, we actually got into a delta neutral position. As time progresses, that helps us collect the $43 in theta that we can receive from this position for holding it. And because our delta is perfectly neutral, or almost perfectly neutral. In other words, we want to be in the center, not of our expiration graph, but we want to be in the center of our current profit and loss graph, which is this white line here. And because we had such a large move down, it took a couple of days for it to adjust, and now we continue to collect that $45 of theta every single day. What happens if the price moves down another dollar? And for the Qs, that's a fairly large move. Now we are approximately 300 deltas long. In order for us to get delta neutral, what do we have to do? Well, we have to go in here and we have to sell 300 shares of stock. If we sell 300 shares of stock, we again are delta neutral. And we have a current profit on our position. So you can see that you can adjust with stock in order to become delta neutral. That's why I call it theta scalping. Because when we get delta neutral on this white line, which is our current profit and loss line, we are able to collect the maximum of theta for those days in which we are delta neutral. Now here's the criteria for this. You're going to be putting on your positions. You can put on your iron condors. You can do any kind of trade in which you have positive theta. So you could even do this with calendars. You could do this with double calendars. You could do this with diagonals. You could do this, I prefer it with iron condors and vertical spreads for credits, in which there's positive theta. Because the reason for that is that if you were to do, obviously if you had negative theta, you are not scalping for theta, you are scalping for profits on the price of the stock, like we did with gamma scalping. So the criteria is that you want to do this only on positions in which you're positive theta. Number two is you only want to do this on indexes or ETFs in which there are liquid options. For example, you want to do this on the diamonds. Now the diamonds are a little more expensive. Diamonds are about $114 a share. So adjusting for theta or theta scalping could be a little expensive on the diamonds. You could do this on the SPYs as well. But once again, the SPYs are a little expensive. They're about $125 a share. That's why I like to do it on the Qs. Number one is that if we just take a look at a graph for a second of the Qs, this is in this day in particular, in which the Qs went from a low of 44 to a high of 45.97. That was a 1-point move in the Qs. On the Dow, that was a 300-point up move. So you can see the Qs don't move as much. That's why I like to do it on the Qs. There are other ETFs out there that you might be interested in doing it on. You could do it on DUG. You could do it on SMH. You could do it on XHB. The only thing that you have to be concerned about, though, is the fact that you need to be able to borrow the shares in case you need to sell it short, just like we did with gamma scalping. So if you're going to do an ETF, make sure that in fact you can borrow those shares. The other reason is that I only do it on ETFs or indexes is because with stocks, if you happen to purchase a stock like AIG and all of a sudden it drops from 30 to 23, which is a 7-point move overnight, you're going to have a very difficult time adjusting for theta or theta scalping. So always make sure that you do it on an index that you can borrow shares, and also do it on an index that doesn't move too much. And the Qs are absolutely perfect for this. We had a 300-point move in the Dow Jones Industrial Average, like I said, and the Qs only went up $1. It's relatively easy to adjust when it only goes up $1 after a 300 move point on the move on the Dow. At this point, I could adjust for my deltas. I could buy 200 shares of the Qs at this point and adjust. However, in gamma scalping, you want to adjust as much as possible so that you can scalp profits from the stock. In theta scalping, you want to wait a little bit longer. You want to wait till the delta is maybe 250, 300 even before you make your first adjustment. You don't want to have to adjust too much. The reason is if you do go ahead and buy 250 shares of the Qs now in order to adjust your delta and it moves downward, well, you're going to lose money on your stock. Of course, you'll be delta positive, so that you'll be able to collect that money every single day, and you'll probably more than make up for it. But if you do adjust and it goes down, you're going to lose a little bit of money on your position because of the short stock that you have or the long stock that you have. So you don't want to adjust too much with these types of positions. Now when it starts to get to a point where it's 300 deltas, then I would definitely adjust. If this price doesn't move back in line tomorrow, then I'll go ahead and adjust it. I'll probably buy a couple hundred shares in order to get it to relatively delta neutral position. But that's exactly what we do when we theta scalp. We want to keep this in a delta neutral position so we can collect the maximum theta every single day and be in a profitable position all the way until expiration. So the closer that we get to expiration, the better when we're delta neutral. And as we get closer and closer to expiration, obviously our white line continues to move. And the nice thing about this is let's say we're we're September 10th, and we're only 6, 7, 8 trading days from expiration. Well, right now we have a profit of $2,125 on the position, and we're 359 deltas short. Well, if we want to, we can go in and purchase 300 shares in order to get us back to delta neutral. The nice thing about this is we can do this right up until expiration week. Remember, I told you that price in the last week of expiration is the most critical component and the reason why, in the one risk that you have going into expiration week, holding calendars, double calendars, etc. Well, when you adjust with the stock, you can adjust your deltas anytime you want and bring them back to delta neutral position in order to collect the maximum amount of theta just before expiration. So let's say right now that we have about 7 or 8 days before expiration of the September options. I currently have a profit of 2,047. Well, my maximum profit is 3,099. It came down a little bit because I bought the stock. But that's still $1,000 difference. If I needed to adjust, let's say the price went up. Well, let's say it just went down a little bit, and then we'll look at an adjustment on the upside. It went down a little bit, and I'm 458 deltas long. What I could do is simply sell out my stock, and that puts me back into a delta neutral position. Now I'm collecting close to 90 theta dollars a day in theta as I get closer to expiration. And let's say it moves up $1 now, which is a pretty big move for the Qs. I just showed you there was about a 300-point move on the Dow, and the Qs only went up by $1. Well, now I'm slightly off delta. I'm actually negative 402 deltas. I can adjust by buying 400 shares of stock. And if it really doesn't move, I haven't lost any money on the stock, but I continue to collect theta, and the theta gets larger and larger the closer it gets to expiration. Now it's $100 a day. And that gives me confidence to hold the position right into expiration, collecting the maximum amount of theta and the maximum amount on the position. We did lose a little bit of money by adjusting our position with stock, but not as much as we did if we had put on calendars to adjust. Plus, it would have been extremely expensive to adjust with calendars because remember, we had to put on like 45 calendars in order to get back to delta neutral one time. With stock, you can continually adjust your deltas back to a delta neutral position so that you can go right into expiration with your position as long as some of your short positions aren't in the money. Then it creates other risk, for example, being assigned. But you can get relatively close to expiration using this method of theta scalping with the stock in order to get delta neutral. By that way, you can collect as much as you possibly can from the theta, and it's not as active as gamma scalping. With the gamma scalping, you really need to be there every single day to take advantage of the price movements of the stock in order to scalp the profits out of the stock as it moves around the delta. With theta scalping, you wouldn't have to look at it very much. In fact, I barely look at it more than a minute or two a day just to see where my current delta position is. In fact, on this position that I've had now for over a week, I have not adjusted it even once. We are slightly long or slightly short delta, and if I need to, I will go ahead and purchase 300 shares of the stock once it hits negative 300 deltas. But that's about all I'm going to have to do for quite a while. Unless the index gets extremely volatile and it's moving up and down a point a day, you know what? I'll just let it move up and down a point a day because it doesn't make any difference to my position. It's only when it starts to get to a plus 300 delta or a negative 300 delta that I will want to adjust it. This is how you can build very large positions in the indexes by doing theta scalping. You can add positions. For example, it wouldn't be any problem for us to go ahead here. I'm not short the 47s. I could go ahead and sell a vertical. Let's say I didn't even want to do I could go ahead and do another 10 contracts on here. It puts me at 351 delta. I go ahead and put those on and then buy 300 shares of the stock in order to get delta neutral. Just like we did with gamma scalping, I always want to be delta neutral. Once I get to 300, I don't want to always trade though. I don't want to be back and forth like gamma scalping. This is a little bit easier, especially for you guys that only have maybe 10 or 15 minutes a day in order to to trade. You just check your delta. If you need to go long, you go long. If you need to go short, you go short, and you're done. So you can continue to collect theta, and you can continue to do vertical trades all the way up until expiration. Let's say I wanted to sell this one. I could go ahead and sell this too. Let's say I want to do 10 of those. I mean, it's not a huge credit. Actually, I'll probably spread those out. See, the nice thing about this too is that I can spread these out a little bit more too. Get a 39-cent credit on that. And it almost brings me back to delta neutral. Now, if I did both sides, maybe I wouldn't even have to buy the stock. I'd be about 203 deltas just by putting on those two positions. And I keep adding to my income as we get closer and closer to expiration. And then, if I need to adjust, let's say the price goes up a little bit. So it goes up 50 cents. And now we're 344 delta short. All I have to do is come in here, buy 300 shares, and I'm delta neutral again. All the while collecting that very, very important theta, which gives me my daily income. So if you want to trade big and you want to make a big monthly income, this is the way to do it, guys. Just be careful that you do it on an index that has that are very liquid options. I like it on the Qs because during the day, right now we're closed, the option market's closed, so the spreads are a little bit wide here. But during the day they're very, very tight, and you can borrow the stock anytime you want, and it's an index fund. Remember, if you're doing stocks, you don't want to drop like this. You don't want to do it on individual stocks. You want to do it on indexes and ETFs. Okay? Okay, guys, that's it for theta scalping. You can trade as big as you want. You want to do, I would build a position. I wouldn't really go into really big positions right away. But if you want to, you can start building positions over time. Adding to this is another thing too, is that you can add to your positions. You can add to your positions. Maybe start out with 10 of these, 10 of these, 5 of these, 5 of these. Then you add another 5, another 5, another 5, another 10, another 10. Every other day, go in, take a look at your current, price situation, and keep adding to it. Right now, if we hang on to this till September, we've got $5,561 that we can collect. And this isn't the only one I have. I also have a position on the SPY, which I just started building. Now, this is a December position. Now, you wouldn't think that anything that far away would start making money, but I've already started making money on this position. You can do these far enough ahead. In fact, I would suggest the farther ahead you do them, the better. I mean, not too far. I'm talking September. Right now we're at the beginning of August, so you can go September. You can do some in October. If you have options in November, you could do November and December. So I would do all, if you want to trade big, you can do all 3 months. September, October, November. I got these in December. That's a little far out, but I want to see how it does. And I actually only put this on a few days ago, and I'm already making money on it. So as long as the theta is positive, yeah, the theta is not huge right now, but the closer we get to expiration, obviously it's going to continue to increase every single day. And that's what I really want to happen. I want this theta to be increasing every single day. And if we take a look at the trade tab here, we got 134 days to December expiration, but guess what? I'm just starting to build my position. I want an early position. I took just a few contracts, which I'm going to be adding to every week. As the price changes, I'm going to be adding to my position. And I'm going to be carrying this all the way through to hopefully right into December expiration, and make a fairly good income for that month. So you can do this for every single month, October, November, December. If you're in August, if you're in December now, you can go January, February, March. If you're in March, you can go April, May, June. So you can carry these out for a number of months. Don't be afraid to do it too early. If it does go against you, you can just, you don't want to adjust too much, but you can start out with a small position and then build your position over the months coming in order to generate that large income. All right, guys, that's it for today. Hey, I hope you enjoy this. This is the way to trade. You can get a huge monthly income here. Build your position out over time and start generating that theta income. And I think you're going to be really happy with this theta scalping strategy. It's really going to help you out to keep you in delta neutral and keep you collecting that theta every single day. Trade with confidence.